Good morning. Today is Thursday, January the 19th. The time right now in Singapore is 10:34 in the morning, and overnight on Wall Street, we did see a bit of a pullback. We have the release of the PPI, which is the Producer Price Index, which was actually very much in line with market expectation. Actually, it pulls back on a year-to-year basis is at 6.2%. This is a far cry from where it was north of 10% last year. So we can see that on the PPI front, we also see a easing of the inflation. However, what spooked the market was the various speeches made by the various branches of the Federal Reserve. Federal Reserve have many branches, and they all came out talking yesterday night, and that caused the market to actually took stock of the recent rise in equity prices. Essentially, what they are saying is that they need to see there's a need for Federal Reserve to actually keep interest rates northward of 5%, somewhere in between the ballpark of 5 to 5.5%. So that means that the market, based on the current Fed fund rate of slightly above 4.25. So we can see that there's going to be another 1 percentage point move to the upside. So market took it that come February, when the FOMC next meet, the rate hike may not be what the market expected over the entire length of 2023. So that casts a long shadow over the recent rise in equity prices. And from the chart, we can see that the Dow Jones, after hitting a high of 34,342, has basically runs the danger of actually capping this run. Okay, so the earlier expectation of a market running ahead and try to challenge the last December high at 34,712. Now we will have to take another look at it. The possibility of the market actually peaking at 34,342 this week is actually very, very high. So considering what we are seeing overnight, this move here is actually quite severe. If we are optimistic, maybe this will end up as a three-wave, then maybe to challenge the December low. But if this cascade into something more serious, then I think those orders that we have seen buying up the equity market may came in and realize that the market is not going to go much higher, and they will cause a what we call an avalanche. Okay, so basically the danger is actually very, very high, because overall the larger degree pattern suggests that the market is still in a bear market. Okay, so any kind of sell-off can actually trigger off a much larger wave of selling. So do watch out on this front here. On the S&P 500, we also saw the market peak at 4,015 this week, and then you can see that this is an outside bar, and this is quite serious. We want to see that this market can stabilize, but we only have one more day before the weekend. Like I say, I don't like this weekend, because the next danger period is January 23rd, which is coming up on Monday, next Monday, and I do think there's going to be something really monumental that can happen. Not sure what will be the catalyst, but I think based on timing cycles, there's the risk that we could see quite a severe move come next Monday. So I do not like what we are seeing right now, going so close towards the end of the week, having to see this move here. Okay, over in the Nasdaq 100, we can see the market actually went up to a new high for the month itself, having traded to 11,690. But again, you can see that based on this 4 hours time frame, there's an outside bar here, and this is a very serious development, because this is definitely a very bearish development. So if the market continues to decay lower today and tomorrow, and then there we have it going to the weekend on a weak note, is definitely not a good sign. Okay, so do watch out for the possibility the market has already peaked at most recent low this week. Okay, most recent high this week. And then over in Hang Seng, we can see that the market has not reacted very negatively yet. Okay, the high traded is just under 22,000. But if the Dow Jones cannot go up, or if Wall Street started to peak and started to slide, then that obviously will not be able to be a good platform for the Hang Seng Index to continue to charge higher. So we will have to continue to watch this. But by and large, this rise from last October low remains very robust for now. Okay. Over in the Shanghai Composite, we also have the same thing. The market is just basically treading water, and the high traded of 3,251.18 this month, okay, remains the highest point after taking up the last December high, sorry. Okay, so we can see that the market right now is just maintaining its posture, waiting for some kind of guidance from Wall Street. Okay, Over the Nikkei, we also saw a pullback from yesterday's high at 26,816. And this is always the danger, because if this is a structure, then, previously I was mentioning this level, 26,630, could be a pivotal level. Market actually went beyond, but on the day-to-day closing, it did not quite manage. So you can see now market has pulled back. At the get-go this morning, market opened with a gap down. So this is actually looking very much like a wash trade. Wash trade means the market do a fake move and then lure everybody to one side, and then it reverses direction very suddenly. Thus looks like this is the case here. I suspect that it is a wash trade. So do be careful. If this is a wash trade, it means we are going to see progressively lower price. Moreover, this is a three-wave rally. It is not conducive for sustained rally. Okay, so do watch out for the possibility that we may have a new low for the month before the month end is out. We have more than about 10 days left before the month is up. The month is out, so we do have to watch out this move here. Over in dollar yen, we can see that the market actually was spooked by yesterday. Yesterday, the market was expecting the Bank of Japan to actually do something on the interest rate front, although they do not expect them to actually neutralize the negative interest rate, which is currently standing at 0.1%. Okay, it is the last G7 central banks to hang on to negative interest rates. So we can see that the Bank of Japan did not do anything. That disappointed the market, because the market was actually building up. Okay, as the dollar was coming down and the yen gets stronger, the market was seriously expecting the Bank of Japan to announce something earth-shaking. However, it came in as a whimper. They did nothing. So the market have to unwind those short positions, causing the dollar yen to spike up from 127.21 all the way to 130.157. This is a big move here, about 400 points here. So you can see this kind of move is actually not conducive, because it caused the market to be, whipsaw. Okay, then by the time the New York market opened, dollar yen came back down to where it was roughly before the spike up in Asia yesterday morning. Okay, so the market currently trading on 128.45 levels. It does looks like the dollar wants to go up. Okay, so even here we can see that there's a possible reversal of patterns. Okay, we saw that in equity markets in the US, and we may actually see something quite similar in currency rates as far as the dollar is concerned. Dollar has been falling for quite some time now, so there is a danger here that the dollar may actually stabilize and starts to reverse to the upside. Okay, over in the euro versus the dollar, we saw something remarkably similar to what we saw in equities. Market went up to 108.87 in the euro versus the dollar, and then subsequently reversed. You can see this is a reversal signal. Okay, and this is a reversal signal. That means it does not look good. That means to say that there's a possibility currency may actually peaks out, and the dollar may take its resume its rally that we saw as late as last September. So there's a real danger here. The dollar may has already bottomed. So do watch out for this possibility here. Aussie also has a very remarkable reversal here. We can see this market went up to 70 cents, slightly beyond at 0.7063, and then you can see this market pullback. Okay, now the key here will be I think this level here. Okay, this level here is at 0.6860. Okay, if this level cannot hold this run and the market continue to edge lower and take out this support line here, then all is over. It means the dollar is confirmed to have already bottomed out, and we are looking to trade to the upside for dollar going forward. Okay, over in the sterling, we also saw something quite similar. We also have an outside bar here. Market traded to a high of 124.36, and then market reverse. But the good thing is that the market is trading within the rising channel, and it has already punched beyond the midpoint level here. And so far it is holding out, but we are still very early in the day. London has not opened yet, so we will wait for London to give us the lead to see if the market can hold at this midpoint. If it can, then at least it offers some kind of near-term support. But if it failed to hold, like what we saw in euro versus the dollar, I think this could well be the top. Okay, do watch out for this move here. And over in dollar Canadian, this is the most obvious reversal that we can see. The market, if we have done a three-wave, should actually be capped at 134.50. Okay, but the market went up to 135.19, almost 20. And you can see this move here is a little bit more aggressive than expected. And just from the structure here, it does appears to me that there is a very real danger that the dollar versus the Canadian dollar may have bottomed at 133.21 that we saw last week. Okay, now over in crude oil, we also saw a major reversal. So everything that I see since overnight trading, everything seems to be reversing. Okay, crude oil hit a high of $82.66, and then you can see this major pullback here. This is definitely a reversal. That means for short term, I think there's a real danger market may go back to $76, maybe even lower. So do watch out for this potential pullback in energy prices, especially as crude oil is concerned. Okay, and look at gold. Gold has not shown me signs of reversal yet. Okay, although there was an attempt to rally beyond $1,928.90, but the rally failed out, and then you can see towards the second half of trading in New York last night, market actually pulled back, but it's still too early. By and large, it is still maintaining its a very bullish posture, so maybe there won't we may not see a very severe pullback in precious metals. Okay, but that if we do see precious metal pull back significantly, that will reinforce the idea that the dollar has bottomed, because precious metals complex and the dollar move in opposite direction. As we all know, a stronger dollar will cause precious metals to come back down. So if we see a very sustained pullback in precious metals, whether it's gold or silver, then there is a possibility that not possibility. There is just reinforced the idea that the dollar may have already bottomed. Okay, for this one. Okay, this move can be more severely seen in the silver market. Silver actually broke out of the rising channel, which it has maintained all the way back in October last year. So this is a very long bullish rising channel, and it was taken out last night, and this does not look good. Okay, if silver is taking the lead to the downside, then maybe we can see lower prices. Again, the key level here will be $23.12. If this market cannot hold, the market continues to slide below this $23.12, then there's a real possibility this thing may actually trade much lower. Okay, I would love to see that, because long term I still want to buy precious metals, especially silver. So this pullback is actually good news for me. Now all I need to do is keep my powder dry and make sure that I have enough resources to actually engage the market on the long side when the time comes. Okay. Over in crypto, we do see a major reversal, or maybe my correction, potential reversal. Now, Bitcoin went up to $21,649 overnight, and this is definitely a reversal signal. You can see that market here, you can see this horizontal red line here reflects this last November high here at 21,484. So we have a top here, and we have a market that flipped with the November high, never quite closing above it, at least not in the daily time frame. And now we have seen this move here. Now you look at the daily time frame, it does appear to me that this is an outside bar. So this outside bar here is definitely a negative development. Okay, so if this thing becomes a reversal, there's a very high risk that Bitcoin may has already topped out at 21,649 last night. Okay, so do watch out for this potential development. Any kind of rebounds, I'm now very keen to actually sell. If market can pull back 50%, I will be one of the first to want to sell this. Okay, I've already sold the Ethereum, so I want to see if I can sell some more. Okay, in Bitcoin. So, but right now, let's say for example, the market can pull at 50%. Where is the level? The level is at 21,486. Okay, so this midpoint here, based on yesterday high, yesterday low, will give me the idea of where the rebound can go up to. So 50% has always been a midpoint, a pivotal point, not necessarily the only point, but it will allows me some kind of at least a level to actually consider doing a short. If the market actually trades back up to here and I saw a reversal signal on the lower time frame, I will take the signal and trade to the downside and put my stop just above 21,700. Okay, with Ethereum is the same thing. We saw the Ethereum pullback yesterday high of 1,608.8, and the market went down again. Similarly, I've already gone short last night, and I'm waiting for another level to go in again. If the market can bounce back to 1,555. Okay, so I will be very keen to add on to my short position and see how this market will trade. Of course, I will put my stop just above $1,610. Okay. Over at Ripple, the market is not as bearish. Okay, I don't see any major sign that is telling me the market has already topped out. So far, the pullback from $4,090 is a three-wave affair, and it's largely supported by this rising support here. So there's nothing to worry on Ripple as yet. Okay, and lately we've been hearing all kind of noises, especially from Ripple Lab. CEO saying that he expect a verdict between the SEC and Ripple very, very soon, and he's pretty optimistic. So if that's the case, then there is potentially upside potential for Ripple here. Okay, over in Cardano actually pulled back in a three-wave pattern, which was very much expected. The market traded to a low of 0.325, which is very well within my target range of 0.322 to 0.332. Okay, so we will see if the market continue stabilize within this bracket of prices and then started to go up, then I think this is a correction. However, if the market do plunge below 30 cents, then that's a different story altogether. Okay, the market need to hold at 30 cents. Okay, or not, more specifically at 0.308. Okay, Solana is maintaining a very bullish posture. The pullback, yes, we saw a pullback overnight. This morning we saw a low of $20.30, but this is within expectation. And this is, by the way, the very, very minimum we can pull back, because this is 23.6% of the entire rise of just under $8 to the high of $25. So this is a very, very shallow pullback. If the market can stabilize somewhere within current, ideally around this price, and start to go up, then obviously we still maintain the bullish outlook for Solana. Okay, this is all I have for you, and there's no major figure to be released for US for the rest of this week. So do watch out for development of in equities, especially across the entire spectrum of asset classes, in which signs of reversals are already emerging because of overnight price action. Okay, this is all I have for you, and I wish you good luck, and I'll see you tomorrow. Good night.